Greetings, and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 2nd of June, 2018. Today I'm joined by my co-host Mike, so let's begin. Welcome, Mike. Thanks for joining the show today. Here. Topic number one, just our weekly roundup of stuff happening. Just looking at the 24-hour change here, though, of different cryptos. Got IOTA climbing quite a bit, Kyber Network up quite a bit, Huobi token up 9.6%. Squirt down a bit, we've got Qtum up 8.9%, Veritasium 8.8%, Neo up 4.2, 4.5. So things are moving a bit today. Some more bigger name ones.
Pretty flat on the weekly.
Switch over. Yeah.
Pretty much what it was last week, 333 billion.
Fairly flat week. Yep. So global charts there. I've got 329 at the beginning of the week and 333 at the end. We did have a fairly significant drop in the middle, down to nearly 300. It's $1 billion I'm talking about, US dollars. But kind of ended the week where we started. But just a little bit of arbitrage, different things in between. Have a look at Blocktivity. Steam at the top. BitShares number 2. Ethereum number 3. Ethereum, again, pegged as usual, 33,000 unconfirmed transactions. That's a little bit higher than what we usually see at this time. Bitcoin number 4. Golos number 5. Ethereum Classic number 6. Dogecoin number 7. Litecoin number 8, Bitcoin Cash number 9, and on and on. So that's Blocktivity. Let's get on to the news. First news article, IMF official calls for regulation tech adoption by banks to fight crypto competition. An official from the International Monetary Fund. Okay, now first off, before I dig into this, I just want to say the IMF, International Monetary Fund, big international banking institution, this article is going to be full of FUD against crypto. FUD against crypto, that's what the bankers like to put out, so just keep that in mind. An official from the International Monetary Fund suggested that central banks need to make fiat currencies more attractive for the digital age. In an article published May 31st, Deputy Director of the Monetary and Capital Markets Department, Dong He, suggested 3 responses to combat potential competition to central banks from cryptocurrencies. First, he stated that, quote, central banks should continue to strive to make fiat currencies better and more stable units of account. He stressed the role collective expertise and experience play in monetary policymaking. Now, that right there, I mean, they should make fiat currencies better and more stable units of account. Like, they have ever had any concern about that. Well, we'll just see. So the article quotes the IMF Managing Director, Christine Lagarde, who said that, quote, the best response by central banks to crypto is to continue running effective monetary policy. Okay, when have they ever run effective monetary policy? That's never been what they've really been about. But they should continue doing so. Oh yeah, I should just read this, shouldn't I? While being open to fresh ideas and new demands as economies evolve, she says. She goes on. She completes. The deputy director then argued that it is necessary to regulate the use of crypto assets to hold off regulatory arbitrage and any, quote, unfair competitive advantage, end quote, that crypto assets can get from lighter regulation. Quote, that means rigorously applying measures to prevent money laundering and the financing of terrorism, strengthening consumer protection, and effectively taxing crypto transactions. I'm sorry, I can't just read this. Look, these guys, they don't have any competitive advantage, they don't have any competition aside from crypto. They never have, really. And who regulates the central banks? Who regulates the Federal Reserve? Really, seriously, nobody does. Nobody's regulating the Federal Reserve, and you don't see the SEC going to the Federal Reserve and saying, hey, let's open your books up and have a look at what's going on here. We want to make sure there's no insider manipulation of the adjustment of interest rates. Does that ever happen? No. Will it ever happen? No. The Federal Reserve is a private bank, and they have control. They have control over Congress with regard to this because Congress has given them carte blanche, and they get away with whatever they want. So the only competition that these central banks have now is crypto. And so they're saying they want to regulate to prevent the unfair advantage that crypto has. If I wasn't on air right now, I'd be rolling on the ground laughing my bleep off. Okay. I'll continue. He is also suggesting issuing a central bank digital currency to, quote, make their money more attractive for use as a settlement vehicle, end quote. He said that a CBDC, central bank digital currency, could reduce transaction costs for individuals and small businesses, as well as allow long-distance transactions. Quote, for example, they could make central bank money user-friendly in the digital world by issuing digital tokens of their own to supplement physical cash and bank reserves. Such central bank digital currency could be exchanged peer-to-peer in a decentralized manner, as in a similar manner to crypto assets. He suggested that central banks can profit from the underlying technology of crypto assets, saying that monetary policymaking can benefit from technology by improving central banks' forecast using big data, artificial intelligence, and machine learning. The IMF officials have sharply criticized cryptocurrencies in the past and suggested they be more thoroughly regulated. Earlier this year, Christine Lagarde stated that regulation of cryptocurrencies is inevitable and necessary on an international level, focusing on regulating activities over entities. In March, Lagarde said that crypto markets must be regulated by the same laws that apply to traditional markets. She argued that cryptocurrencies could threaten the stability of traditional financial markets and that regulations must be developed on a global scale with help from the IMF. With help from the IMF to make sure they cut themselves into that process. That new international regulatory bureaucracy.
Yep.
Yep. I mean, what can you say about that? That is total fear there.
I can say that I will have no part of any crypto that any nation puts out with their stamp of approval on it. It doesn't fit any of the three requirements by my set of ideals. Decentralized, anonymous, open source. And I'll guarantee you that anything that a national government puts out will have none of those properties. It won't be open source. There's no way on that. It won't be decentralized because it'll be operated by the Federal Reserve or whatever central bank, and it sure is not going to be anonymous. And if they have the ability to make my coins vanish at any point, then it's their problem. Yeah. So, but.
Well, look at Venezuela. How much traction have they got with their coin? I mean, next to none. I mean, that's going to be the fact of the matter of what's going to happen, I reckon. They want to issue these. They might get some traction here or there, but in the long run, it's not going to work out. This is why we're big fans of MAIDSAFE SafeNet and its SafeCoin, because it can scale to millions of transactions per second instantly, because it doesn't have a blockchain, and it's completely anonymous and untraceable and untrackable, and it's open source. It meets all three of the requirements, and it's just the best thing that's going to be out there in the foreseeable future. I mean, it's not there yet, but when they get it out there.
Bing, 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 Johnny, we have a winner. Tell him, what do you win? Financial freedom. Yes, you too can have financial freedom.
That's right.
Sorry to go game show, but that kind of reminded me of that. What's our next news?
Our next news is Visa card payments failing in the UK and Europe, highlighting the need for decentralized options. Visa has said their card payments are experiencing disruptions across Britain and Europe, the BBC reported today, June 1st. Visa, which handles over 150,000 million, so basically 150 billion transactions a day. I did a calculation on that. Let me just... Oh, no, it's disappeared. I think that's like What do I work out? It's like 1.7 million transactions per second, right? That's what that number equates to. Over 1.7 million transactions per second. So they tweeted about the service disruption, noting that they will keep updating as they resolve the situation. We are currently experiencing a service disruption which is preventing some Visa transactions in Europe from being processed. We're investigating the cause and working as quickly as possible to resolve the situation. Now, I'm sure they'll resolve it. You know, they'll add some more servers to their centralized network. They'll make the pipes a bit bigger here or there. But the issue is that transactions overall are growing. You know, people are being pushed away from cash, and that's pushing them more and more into the Visa and MasterCard processing network. And that means they're going to have some big problems over the next few years as they try to scale their own very centralized system. I pointed out the 1.7, that this is 1.7 million transactions per second, because when you think of like cryptocurrency, we're usually talking in the under 100 transactions per second sort of range for most of the older, you know, Bitcoin and that kind of class, the earlier crypto 1.0 kind of coins. And the crypto 2.0 and 3.0 kind of coins are getting upwards, you know, into the thousands maybe. And you know, there's some 3.0, 4.0 level coins that are looking at or talking about doing 1 million transactions per second soon. EOS and credits and some others, they talk about that. So we'll see if that happens. Down the track, though, you know, we're going to need a lot more than just 1 million transactions per second. We're going to need things that really scale. And again, that means something like SafeCoin, which doesn't have a blockchain. So I don't know how you can get to the kind of level that Visa MasterCard has with a blockchain. It just doesn't seem possible to me unless you have huge centralized infrastructure. And
what was the number that you were
certainly
saying? Handles 150 million transactions a day.
Yeah. So I divided by 60, then divided by 60 again, then divided by 24. So 24 hours, 60 minutes, 60 seconds. And then I got 1.7, and that would be, in my calculation, 1.7 million transactions per second.
I got 1,736. 150 million divided by 86,400 seconds, or 84,600. Yeah, 86,400.
Sure what I did wrong.
But anyways, it's about, I come up with 1,736 transactions per second on that.
Oh, well, that's a lot lower than what I was calculating here.
Yeah.
That's weird.
I don't know if that's just for...
See, now I want to make sure that I got it right.
Yeah. So I don't know if that's for...
150,000.
150 million.
It's 150,000 million. Right. So I'm just taking the 150,000 and I'm leaving off the million.
Well, this says 150 million transactions a day.
The article I'm reading says 150,000 million transactions a day. Are we reading different things? Did they? Oh, we'll just refresh. Maybe they've altered the article.
Yeah, mine says 150 MLN transactions a day.
Yeah, just refreshing here. Well, that would clear things up. Yep. Okay, so they did a typo, and as you can see on the screen, it changed from 150,000 million transactions to 150. So they made a mistake.
Yeah,
so I didn't actually make a mistake. I was going off their faulty numbers.
Yeah, I was looking for you know, the how many transactions, because I thought it was was a lot higher than that, but I don't know if that's their worldwide or if that's their European, you know, based on the article and stuff.
I'm not sure. It's maybe worldwide. I wouldn't think, but they would just put their European.
It's a lot of transactions
anyway,
a second.
It's a lot of transactions. So I guess the upcoming infrastructure can handle that level. So I guess it's really then just a matter of speed and how quickly it handles it.
Yeah, a lot of cryptos can handle the Visa MasterCard throughput already. You know, there are the third generation ones can do that already. So
the Nano, Nano can. All right, well, let's move on to the next news. We've dawdled on there and embarrassed ourselves enough.
Hey, it wasn't our typo.
Japanese Yeah, it wasn't our typo. Japanese government licensed crypto exchange acquired by international investor for $50 million. The Japanese crypto exchange BitTrade has been acquired for 67 million Singaporean dollars, or 50 million US dollars by a Singaporean multi-millionaire and entrepreneur, Asia One reported yesterday. The acquisition will see Mr. Eric Cheng take a 100% stake in BitTrade Company Limited, one of only 16 domestic crypto exchanges to receive a license from Japan's financial watchdog, the Financial Services Agency reported. Cheng is also acquiring BitTrade's affiliate company, FX Trade Financial Company Limited, one of Japan's leading forex trading platforms. As Asia One notes, the investment makes Cheng the first foreign investor to hold 100% stake in an FSA licensed trading platform. What's interesting to me about this is, again, we see more people coming into the crypto space. I mean, that $50 million was given to the owners of this crypto exchange, and they'll be taking that. And what do you want to bet? That some of it is going to be put back into the crypto community in one way or another. And so this is just more money being pumped in, more outside people getting involved and bringing their contacts with them, expanding the crypto sphere really exponentially, because these people come in and bring their contacts, and it just, more and more people get really ultimately involved in the crypto sphere. And it's just becoming a really big thing, an unstoppable juggernaut, really. And I just love to see that. That's why I report on articles.
I would have laughed if he would have paid for it with Bitcoin.
Yeah, that would have been great.
All right.
Our next article, U.S. crypto exchange signs agreement to offer fiat to crypto trading to corporate clients. This is Seattle-based crypto exchange Bittrex, a very popular exchange in the U.S., has signed a banking agreement that will allow corporate investors to trade selected cryptocurrencies for fiat. Bittrex, which supports over 200 cryptocurrencies and reportedly has over 3 million customers worldwide, will cooperate with New York-based Signature Bank to launch fiat trading for Bitcoin, Tether, and TrueUSD. Speaking of the new banking deal, Bittrex CEO Bill Chihara is quoted as saying that the process had been a long path. So this is interesting. This will give a little more competition to Coinbase, which, not in the short run probably, because this is only going to be for corporate clients, but in the longer run, they're aiming to bring in everyone on their exchange to use it. So the service will initially only be open to corporate customers in the states of Washington, California, New York, and Montana, reportedly for regulatory reasons. Bloomberg further reports that Bittrex has plans to ultimately offer crypto fiat trading to retail customers as well. So there you go. This is going to be ultimately, in a few months, I reckon it's going to start to open up and be more of competition to Coinbase, and that's good. We like to see competition. Our next article, stock exchange Deutsche Börse to spend 315 million on new tech, including blockchain. German securities marketplace and stock exchange Deutsche Börse will be spending 270 million euro, around 350 million US dollars, on new tech investments, including blockchain. Finextra reported yesterday. Reported May 30th. The spending plan, part of the company's 2020 roadmap, which will involve 350 job cuts, will also include big data analytics, cloud computing, robotics, and artificial intelligence. Deutsche Börse, the 9th largest exchange in the world, notes that the plan also includes the creation of several hundred new jobs in these sectors in the future. So again, more traditional fintech moving into the crypto arena. We love to see that. Expanding out the base, and this ultimately is going to lead to big gains for all of us in the crypto sphere. Our next article, Merrymakers 2018 Internet Trends Report, shows interest in crypto is exploding. It's exploding in quotes. Former Wall Street analyst, Merrymakers' well-known annual Internet Trends Report for 2018, published on May 30th, shows interest in cryptocurrency exploding since January of last year. The report also highlights that a course on Bitcoin and cryptocurrency technologies made it into the top 10 most popular university classes in 2017. This little graph there. See, machine learning at the top. Well, I'm not sure if those are in order or not. According to the report, Bitcoin and cryptocurrency technology is one of the top courses at Princeton in 2017. The Internet Trends Report, which was compiled with the help from Kleiner Perkins Partners, Hillhouse Capital, writes that it, quote, uses data to tell stories of business-related trends we focus on. We hope others take the ideas, build on them, and make them better. Meeker's report also shows that interest in cryptocurrency is increasing using the growth of crypto exchange and wallet Coinbase users to demonstrate this trend. There's another graph there looking at that. Blockchain firm QED, its Maya Zahavi, tweeted yesterday about the report, noting that the Coinbase user data does not include crypto's December growth, which was when Bitcoin's price rose to 20,000. So it's probably good they excluded that. That would have been an outlier, I suppose, in the data. But cryptocurrency and blockchain courses are in existence all over the world, with a Brazilian university launching its first crypto finance master's degree in April, and an Australian public research university announcing a new course on blockchain this past February. So again, just more evidence of growth happening and a reason to be very optimistic. Our next article, survey. 3 out of 10 Germans are considering crypto investing. 29% of Germans are interested in cryptocurrencies as a form of investment. Cointelegraph auf Deutsch reported Tuesday, May 29th. German bank Postbank came to this conclusion after a survey of 3,100 Germans, which was conducted from the end of February to the end of March 2018. When asked about why they are interested in crypto, 60% of women and 51% of men cited, quote, independence from established financial systems as an important factor. The possibility of high returns, on the other hand, especially attracts men, 56% against 36% of women. For every third potential cryptocurrency investor, anonymity is also important. So 30% are getting involved for anonymity reasons. I think that's a really important statistic. In terms of age, cryptocurrencies are particularly popular among 18 to 34-year-olds. In this age group, almost every second, 46%, are interested in crypto investing. 6% of Germans between the ages of 18 and 34 have already invested, with another 14% planning to do so over the next 12 months. 14% over the next 12 months, folks. And Germans are not considered particularly poor people. Dr. Thomas Mangel, head of Postbank's digital department, has said in the press release that the sharp price declines in recent months had apparently not impacted the popularity of cryptocurrencies. He believes that the reason for this is a lack of knowledge about opportunities and risks of cryptocurrencies as an investment. Dr. Mangel warns, quote, despite all the fascination, young investors should not lose sight of offers from the established banking system. Anyone who already makes an investment in securities as an investment should certainly not invest in cryptocurrencies because of the high risks involved, because this type of investment is highly speculative. Now, wait a minute. Step back. So he's talking to young investors. If you're going to be investing in something speculative, the best time to do it is when you're young, right? Really safe investments are for older people who've got a nest egg they don't want to lose. Young people do get involved in speculative instruments, and they should, because that's their chance to make mistakes. You know, you've got opportunity to recover from mistakes when you're young. You don't when you're older. This is all that whole paragraph from this Dr. Mangel is nonsense, and please, don't believe everything you read.
Yeah, I just keep thinking of all the the really high flying stocks that have done spectacularly over the course of time and stuff, and I just keep thinking up. Well, what if you would have said to somebody, Microsoft, that company's, they got one product on the market, and it's for something that it isn't even hardly used right now. When Microsoft released MS-DOS for the PC clones back in the 80s, and when they went public in 86, they didn't have hardly anything that was out on the market at that particular point. Oh, no, they're brand new to the market and stuff. Please. It's highly speculative. It could go up or it could go down. You could lose a lot of money. You know what? If you would have listened to that type of mindset instead of just grabbing and holding on to something that was a brand new technology, you would have completely missed it if you'd have waited 3 to 5, 8 years until, the value has been proven through the course of time. I mean, we both watched the internet stock bubble in the late 1990s. We watched it go up and puff up real nice, and we watched it go boom. And if you'd have still held on to your stocks in the companies that that at least the ones that survived, if you had companies like Yahoo, or you had company, we saw Yahoo go crazy. We saw eBay go crazy. We saw Amazon go crazy back then. And, you know, you go and compare their prices now compared to what it was back then when there was, as the Fed chairman says, there's irrational exuberance in the NASDAQ. You know, well, yeah, there is. The advent and the adoption of new technology always brings, you know, price-wise chaos. But if you end up going and choosing your investments wisely, do your due diligence. Look at the projects. Look at the project. Find out who's on the project. You know, find out those people. Take a look and see what they've done. Have they done other things that have done well? Have they done other things that have you know, become more than just quote unquote vaporware? You know, have they brought products to market? You know, it's doing your due diligence and picking, you know, selecting your currencies, you know, or your cryptos with care, and then sitting and waiting. I mean, if you would have gone and sat, you know, if you would have done your due diligence on Bitcoin back in 2013, 2012, it had been around for a few years. It had gone and had its ups and downs. Oh no, it's going up and down too much. And you would have missed the rise from, you know, $30 up to $1,200 during the back half of 2013. Now, granted, it did come way crashing back down, large part due to shenanigans and stuff. And that was due to, you know, people who did shenanigans on Mt. Gox exchange, you know. But did the cryptos go away? No. They didn't go poof. They're still here, you know. And
as long as
if you would have sat on, if you would have sat on the 100 or 200 Bitcoins, you could have gone and if you would have decided, yeah, this is enough in December, January, yeah, this is enough, and each 100 Bitcoins would have been worth $2 million, you know, $2 million. So, you know, that's if you would have decided to sell out. Now, of course, Uncle Sam would expect, you know, or the taxing agency, wherever you happen to be, would expect their cut. But, you know, as far as for that, you still have made the profits by going and sitting and holding.
That's why there's Dash.
There's all kinds of anonymous coins that are in existence now. You could go and quote several of them.
There's Bitcoin Private now, too.
There's plenty of them. Yep, Monero,
Zcash.
Lots of them that are available at the moment that could do that exact same thing. They used to have Bitcoin Dark and stuff. I think it's been rebranded.
It's still around.
It's been rebranded and stuff, but
I'm not sure.
Yeah, it's all there.
Yeah,
it's all there, and it's all just a matter of, you know, if you're young, you have the ability to take the risk. You know, you're not betting your life savings on something. And
that's right. When you're young, this is the time when you do take the risk. So, I mean, still kick the tires, but don't be afraid to get involved in something new. I mean, that's what it's all about, being young. And then you can take those chances. I mean, Mike and I aren't exactly young pups anymore, but even we're out here taking chances and getting involved in stuff. And you know, it's just because we have young minds and we have a fascination for this stuff, and we'll get involved. But if you've got a big nest egg and want some security, well, hell, there's probably still even some places here in the crypto area for you. All you got to do is kick the tires and look around. There's a lot of good things out here. All right, let's get on to the next article. New report suggests average ICO investor sees 82% profit. Now, I reckon that's because they're not kicking the tires. They kick the tires, they could probably see about 200 to 300, maybe 200 to 500% profit. You know, that's the average ICO investor. Recent analysis of initial coin offerings has found that the average ICO investor sees returns of 82%, according to a report published by the Boston College Carroll School of Management on the 20th of May. The 54-page report titled Digital Tulips, Returns to Investors in Initial Coin Offerings, found evidence of, quote, significant ICO underpricing, end quote. After analyzing a data set of over 4,000 planned and realized ICOs, the ICOs studied raised a combined total of $12 billion, almost all of them since January 2017. Average returns from the initial token sale price to the first day's listed market price on a crypto exchange were found to be a staggering 179%, with investors holding periods averaging just 16 days. In cases where the issuers failed to list their tokens on an exchange within 60 days, the researchers imputed large minus 100% negative returns to these tokens, yet still found that the representative investor nearly doubled their investment in such cases. Including these results into the overall asset class data, the average token investment returns are found to be 82%. Overall, the report shows that crypto tokens, quote, continue to generate abnormal positive average returns, end quote, with those investors who held their tokens for longer periods of 180 days seeing the highest returns of between 150 and 430%. The researchers concluded that, quote, while our results could be an indication of bubbles, they're also consistent with high compensation for risk for investing in unproven pre-revenue platforms through unregulated offerings. Our papers suggest that scams, while plentiful in number, are not as important in terms of stolen capital because investors are shrewd enough to spot and underfund them, end quote. So that's a very positive article, very bullish article on, for young investors to pay attention to. There's a lot of arbitrage that can happen here. If the money's good, and I don't know how long this sort of thing will last. It seems to me that as long as people keep coming into this space and the pile of overall cash keeps growing, then it's going to continue for some time. But it also depends on how many new ICOs there are. There's quite a few, and I reckon it'll only grow. But just fascinating, all the growth happening, and just so positive. It gives me a lot of positive energy, positive feeling about how things are moving forward. Our last news article: EOS about to secure a record $4 billion in a year-long ICO. Block One's EOS will complete its year-long token crowd sale later today, becoming the largest initial coin offering in history, having raised a total of over $4 billion. The highly anticipated formal release of the accompanying software, which proponents claim will constitute a decentralized operating system for large-scale decentralized applications, will also see developers prepare token migration to new EOS wallets. The move is significant, EOS having fallen victim to mounting suspicion over its long-term efficacy as well as its token's genuine value in recent months. Not just in recent months, going back some time. Anyway, I'm not going to go fully into that, but I think, Mike and I are investors in EOS, and so, take that as a grain of salt. But like MAIDSAFE Network, we really believe in big thinking platforms like this, and we have kicked the tires. Could EOS be a fraud with its token? Well, there's always that possibility with anything, but I think they've done their best to get around the SEC regulations by not saying what their token's going to be used for, but it's pretty obvious really what it's going to be used for. It's going to be used the same way Ethereum is used. It's going to be used as a token on their blockchain. You wouldn't see them come out and say, oh, well, thanks for all the money, but instead of using EOS tokens on our blockchain, you're going to use Ethereum tokens, right? They're not going to do that. That's just ridiculous. So obviously, EOS is going to be the token used on their chain, and all the decentralized apps and smart contracts that get issued and launched on the EOS system are going to use EOS, right? That just is common sense. People who are spreading FUD about this are spreading FUD to people who really don't have two brain cells to rub together, in my opinion. I don't know, but that's what I believe. So EOS, there's another reason I'm really keen on EOS besides they're having a really fast, big platform that people can build on that can really scale in a major way. I mean, that's what they're saying, and their developer Dan Larimer has a lot of experience in building platforms that do scale. And when we look over here at Blocktivity, the top two, Steam and BitShares, he built both of those, and they are scaling incredibly well. Steam at the top with the most activity is still only using 0.14% of its potential. So now EOS is supposed to be a parallel version of that and supposed to be able to handle really pretty much an unlimited amount of activity. So that's number one. So it's a platform that can really scale just like the MAIDSAFE Network can. And secondly, EOS has raised so much money, and they're pouring that money. They're not just spending it; they're actually investing it with other investment houses to drive development to the EOS blockchain. My view, EOS in a couple of years' time is going to be where Bitcoin is now. Not in terms of money, but in terms of status. So I reckon in a couple of years, EOS is going to be number one on the coin market cap, and what its value will be, well, it's going to be a lot more than it is now. I can't predict that. I mean, you got to predict the overall market rate. We're talking a lot, in the hundreds of billions probably, maybe more. So yeah, I'm very, very bullish on EOS. I'm going to be hodling that for a long time, and yeah, that's all I got to say about that. You have any thoughts, Mike?
Champagne wishes and caviar dreams.
Yeah. Well,
yep.
I suppose.
Hopefully it'll come down.
I mean, there is another reason.
Be good.
There is one more reason that I favor platforms like this over things like Bitcoin. When you're buying into Bitcoin or Dash or Monero or Nano, these coins that are just coins, that's all they do. They're just to store value. You're not actually investing in the economy. It's like buying gold and either burying some of it in your backyard or using it to trade with. I guess it does have some economic value if you're actually trading with it all the time. But a lot of people who are buying Bitcoin now they're just hodling it, which is fine, I guess, to an extent, but it's not actually doing anything. If you hodl like EOS or you hodl MAIDSAFE's token, you hodl an investment into a company that's actually developing something, that's actually building something, you are actually contributing to the value of that company. You're contributing to their ability to actually do things and to build things, and that to me is a much more valuable prospect. EOS is a network that's going to have a lot of other things built on top of it, so I very much anticipate not just hodling EOS in particular, but actually using some of the gains that we make on EOS to buy into some of these other future companies that are going to start up and do things on the EOS blockchain. So that's investing in the economy. And the economy is our economy. The economy isn't a government entity. It's you and me trading and being involved in the development and growth of technologies and businesses that humanity needs for its survival. And I much prefer doing that than buying into just a token that's just for trade. And if in the past, it hasn't really been very easy. If you wanted to buy a stock or a bond, I couldn't go to the grocery store and just say, "Hey, can I get these potatoes for this bond here? It's a bearer bond." They would look at you like you were crazy, right? But we're getting to the point where these cryptos are all equally tradable. Some even more so. I mean, EOS and some of these ones that are really have fast transaction times, you can trade those even faster than Bitcoin, right? So why would you want Bitcoin? I mean, I get that right now, if you want to go to an online store that accepts crypto, it's probably only going to have Bitcoin and Litecoin, maybe Dash. It's not going to have too many probably that will accept. But down the track, we're going to see more and more of them taking things like Ethereum and EOS and things like that as well. And that to me just begs the question, why do I want to hold Bitcoin if it's only just a coin? I want to be part of something that's actually doing something that's EOS tokens will be part of the network. They'll be doing things in the network. They'll be supporting the network. And that to me is a great thing. And I don't see why I should support something that's only a coin. And,
no.
Am I wrong, Mike?
No,
What's your opinion on that?
Sounds logical to me.
Anyway, so on to our final topic for the day, the MAIDSAFE development update. This came out May 31st, 2018. So the top highlights of this week. In case you missed it, please do go ahead and listen to Fergus's interview with Pierre Chevalier. I'm not sure if I'm pronouncing his name right. But Pierre at the MAIDSAFE, one of the authors of Parsec at MAIDSAFE. And so, yeah, I listened to that interview last week. It was quite interesting to give you some details. Also, though. Oh, wait, it explains here in the next one. As mentioned last week, Pierre has recorded a video that explains the entire algorithm, Parsec algorithm, while attempting to remain accessible to everyone without the need for a mathematical background. The idea is that this video would be a good introduction to reading the white paper as it explains the reasoning behind the algorithm in an intuitive fashion. We're finishing off the post-production on this video this evening. We'll share it on the forum across social media channels tomorrow. Okay, well, that's already up. if you go to that, I'll have the link to the video in the paper, but it's also on their Medium article that we posted about last week. That was in the show notes last week. And yeah, so it's there. It's on YouTube now. It is an hour long, so I won't be playing it, unfortunately, here on the show like I do some of MaidSafe shorter videos. But please have a look at it if you have the time to learn about Parsec and know more about what's going on there, because it is pretty revolutionary technology. So number 3, Sotros25 has stepped up and is running a new Safe Network meetup in Chicago. The date of the first get-together isn't fixed yet. You can sign up on the group here. So if you're in Chicago and want to get involved with the Safe Network and what's going on there, or if you're a developer in particular, please get in touch with Sotros25 and join the group. The PR, that's the... oh, I always forget these acronyms. That's a pretty obvious. The pull request, yeah, right. So that's when they're wanting to integrate new software. So they've got designs for things. They're going to try and integrate it into the main line. So the pull request for integrating the new C# bindings has been merged with the upstream repository for Safe App C#. Safe App C# is also packaged and published on NuGet. The C# mobile apps are also updated to use the published bindings, and a PR is waiting to be merged with the upstream repository. So that's great news for C# app developers. You'll be able to communicate with the Safe Network software and build your apps using SafeNet. That's awesome. There's a lot of C# developers out there, and that's great news. Next, with our intent to replace our C library dependencies with pure Rust implementations for more security and portability, we have merged the first pull request to replace the Brotli compression library in self-encryption and confirm that it works with the existing data on the Alpha 2 network. So that's good news. And we've updated the Parsec RFC with an illustration that demonstrates an end-to-end application of Parsec on a gossip graph. Hopefully that helps in understanding the protocol. Well, it might help for somebody who's got some technical inclination. I had to look at it and it just twisted my brain sideways. But you know, if you got some good math background and some really keen to learn about how this works, have a look at that. It looks quite detailed. So marketing the new website during the past week, we've been working closely with the user experience, user interface front-end team on the development of the new website. We've had a number of highly productive sessions debating not only design but also creating content. Parsec marketing. We'd like to thank everyone who has worked online to share the Parsec message since it was released last week. Thank you, thank you. A huge number of you have clapped, retweeted, shared, upvoted, commented, and generally engaged with the wider community to ensure that Parsec receives the publicity that it deserves. As of tomorrow, we will also now have Pierre's video, so hopefully this should make engagement even easier. As soon as this release, we'll embed this within the Medium article. That'll be linked on our show notes today. Blah, blah, blah. So that's pretty much most of it. There's some details here, and if you want to get into the details of this week's update, please find the link in the show notes and have a look, have a read, and have any thoughts,
I think
Mike?
you got everything covered.
All right, that's all we have for today, folks. And this week, I'd like to thank both our viewers and my co-hosts for joining me today. Hope you found the video episode informative and helpful. Please subscribe, like, comment, and share our video with others. Tune in next week for another interesting episode.
Yeah, have a good one, everyone.